All right, let's talk about something we've all seen, something we've all been tempted by: penny stocks. Are these things a secret shortcut to building massive wealth, or are they just a fast track to destroying it? We're gonna find out.
I mean, this is the real question, isn't it? You see a stock trading for what, 2 rupees? And you think, man, if this just goes to 20, I've made 10 times my money. It's the ultimate dream. But here's the thing, is that dream actually rooted in reality, or is it something else?
You know, the appeal is so strong because it taps right into that little part of our brain that wants a shortcut, that wants the lottery ticket to finally hit. And believe me, that get-rich-quick fantasy is the fuel that powers this entire crazy market.
So what's actually happening in our heads? Well, psychologists have a name for it: the lottery effect. Our brains are just hardwired to get laser-focused on that huge potential prize, you know, the life-changing money. And we totally, conveniently ignore the fact that the chances of it happening are practically zero. It's a seriously powerful bias, and it's the very first trap you'll fall into.
And check this out. This is another brilliant mind trick they play on us. It's called unit bias. Okay, look at this. On both sides, you've got 10,000 rupees worth of stock. But which one feels richer? Come on, be honest. Owning 5,000 of anything feels way more substantial than owning just 5, right? It creates this powerful illusion that you're a major player, even when the real value is exactly the same. Or let's be real, probably a lot worse.
Okay, so we've seen the psychological hooks. We know how they get you interested. Now, let's pull back the curtain and see what's really going on with the mechanics of this market. Because this, my friends, is where the dream usually shatters. The whole game is built on something called asymmetric information. It's a fancy term for a really simple and really unfair idea. You, the regular investor, are always the last person to find anything out. The company insiders, they know about the massive debt, they know the factory shut down, they know everything weeks or months before you do. You're basically playing poker against someone who can see all of your cards.
And that information advantage is what makes the classic pump and dump possible. It's a simple 3-step playbook. Step 1, insiders quietly buy up a ton of a worthless stock. Step 2, they get on social media, on messaging apps, and create this massive fake hype campaign. This is the next big thing, it's going to the moon. And just when you and 1,000 other hopefuls pile in, Step 3, they dump all of their shares at the super inflated price, the stock crashes to zero, and they walk away with your money. And by the way, these schemes are more common than ever.
Let that one really sink in for a second. You thought you were investing in a company's future, but in reality, you were just the escape hatch. Your money was the exit liquidity that let the insiders and the sharks cash out their scam. You paid for their getaway.
So, okay, even if you manage to avoid the scams and the psychological tricks, the very math of how these stocks are traded is designed to make you lose from the second you click buy.
The moment, the very instant you buy a typical penny stock, you could already be down 10%. How is that possible? It's because of something called the bid-ask spread. It's the gap between what people are willing to pay for a stock and what people are willing to sell it for. With big, healthy stocks, that gap is tiny. With penny stocks, it's a canyon. It's like paying a 5 to 10% tax just for the privilege of buying in.
And then, what happens when the bad news finally hits and the price starts to tank? You get slammed by the lower circuit. Now, this is supposed to be a safety feature to stop a panic, but in the world of penny stocks, it's a prison. The price is in a total freefall, but the circuit freezes trading. You're desperately trying to sell, but you can't because there are literally zero buyers. You're trapped, forced to watch your money just vanish.
And don't think this is some rare event. In a single recent year, this lower circuit trap froze more than 15,000 crore rupees of regular investors' money. That's a mind-boggling amount of capital, just stuck, bleeding out in stocks that nobody wants.
So, when you put it all together, the mind games, the insider manipulation, the broken math, it becomes pretty clear what you're up against. The odds are just brutal. Let's look at the cold, hard data. Just look at this chart. A solid market index like the Nifty 50. It moves, sure, but its volatility is around 15%. Now look at the penny index, 60%. That is 4 times the volatility. Folks, that's not investing. That is pure 100% casino gambling.
So what happens when you gamble in a casino like that? You lose. A staggering 92% of all stocks that trade for under 50 rupees fail to even keep up with the overall market. Think about that. More than 9 out of every 10 of these stocks are losers.
But wait, you say,
What if I find that 1 in a million, that diamond in the rough that goes up 100 times? Okay, let's talk about those odds. The actual probability of a penny stock surviving and growing into a real, stable company is less than 0.04%. It's a statistical rounding error. It basically never happens.
And this just says it all, doesn't it? When you play this game, you're not making a savvy investment. You are simply making a donation to the person who manipulated the stock in the first place. You're funding their lifestyle with your savings.
Okay, so that's all pretty bleak. But it's not hopeless. So how do you actually avoid all these traps and build real wealth? It's simple. You stop chasing cheap stocks and you start looking for good businesses.
Here's what you look for instead. First, forget the stock price and look at cash flow from operations. Is the company actually making money from what it does? It's the single most important sign of a healthy business. Second, what's its debt-to-equity ratio? Is the company completely drowning in debt? That's a huge red flag. And finally, you have to shift your mindset. Real wealth isn't built on some 100x miracle. It's built by finding good companies and letting their value compound slowly and steadily year after year. That's the real secret.
And that's really what it all boils down to. At the end of the day, you have to ask yourself this one critical question. When you put your hard-earned money into the market, are you actually investing in a real business, or are you just funding the lifestyle of a scammer? The answer to that question will make all the difference.
Let's discuss that in the comments section. And as always, thanks for watching Alux Live. Subscribe for more.